All right, ICT traders, welcome back here. Come, let me show you something. This particular entry. Now, this type of entry is a perfect entry, but then whenever I missed it without touching my entry, I get really angry with it. This particular entry was taken in the London session. I shared this particular entry with my community, guys. Look at it before even going into the trade, but funny enough, this trade did not tap me. It just left my entry with just like 1.5 pips. But then there are other guys that were in the trade. So I promised you that I was going to show you everything I do in every trade I take, whether the trade went positive or negative. Now, aside from that, some of them were in the trade and some of them made some money, like this guy, $2,000 on Profem, I think. And other guys made money from the trade actually. But then I'm going to show you everything we did, or I did, in the analysis before sharing the signal. So look at this. This is GBP USD, and then I was counter trading because this was a downtrend. I love counter trading because I know what I'm doing, guys. So look at this. So price had this boom downside momentum. Absolutely, that was a breakout structure to the downside. You see price pushing down, and I knew that this area would be one of the areas that price was going to go back to. If you check the higher time frame, let's see what we have on the higher time frame, clearing all the liquidity. Now on the long time perspective, guys, this liquidity area where price went to, and then we are now coming back into internal range liquidity, and that was what I wanted to leverage on. I wanted to leverage this movement. But then early in the morning, I went to check what news am I expecting today from the fundamental side, and I came right here. I couldn't see any serious news coming in the morning session. That was the London session. Coming back to my currency pairs, going to DXY. DXY is a beautiful asset for the intermarket analysis. You want to check it every day. And I saw the same thing. This was the delineation breakout structure to the upside. Price was trying to close up this liquidity void before going up. So if DXY is going to be bearish, I will expect GBP USD or Euro USD to be bullish. That was a simple correlation, guys, and it was exactly what I did. You now see how easy it is to trade, guys. Trading is such an easy work to do if you know what you're doing. Except if you don't know what you're doing, then you struggle with the market every time you come close to it. So that was exactly what I did. Price boom, coming down right there. And then look at this on the 15-minute time frame. I came right here looking at this correlation with the London kill zone strategy. It was absolutely beautiful. So this was it. Coming right here, this particular area on the 15-minute, I have this box, which is the Asian session. So Asia has traded earlier, and everything that Asia has done was a range. Now the power of three concept is about to kick in. If I show you where the day started, if I go to session breaks, coming right here, the day started from here. The dead hour was exactly this place, and then the market actively started from Asia here, and it closed Asia right here. So it formed the high of Asia and the low of Asia. All I needed to see was to see some kind of a correlation, because yesterday price had this massive move downward. I want to see this area closed because price doesn't leave it unclosed. Now it is almost 1:3 price movement. Let me see how many pips it is from here to here. Almost 31 pips. And if you are in the trade, you might be thinking of breaking even your position here. Just close your risks. Just let it to flow if you want to allow it to reach your TP. So the Asian range was here. Just a brief explanation, guys. So I saw price clear the low of Asia, sweeping liquidity during the London Open. Now, by the way, guys, we are back to the daylight saving. Those of you who are not in Europe or in the Western world, what is daylight saving? Let me show you what is daylight saving. Now, it's important I tell you this because it's going to give you some fresh idea about the market. So the daylight saving time, DST, is a practice of advancing clock to make better use of a longer daylight available. So what that means in simple term is that during the daylight savings, that is like in the summer, the clock in UK and all the part of Europe, some part of Europe will have 1 hour addition. All right, 1 hour addition. So in Europe, there would be UTC +1, Universal Standard Time. During winter and other seasons, it's going to be UTC, but now it is going to be UTC +1. So what to be 8 a.m. previously in UK is no longer 8 a.m. For those of you that are not in UK and some part of the world, the daylight saving is simply an addition of 1 hour to match up the longer day and the shorter night. That's basically what it means. All right, so look at this price sweeping liquidity below here. I saw what happened exactly right here, just playing it out for you to see what has happened. I said, okay, now give me a shift in market structure to the upside, and I want to close up this gap. I want to counter trade because I'm so sure that price will give me the opportunity to close up this place. I went to the 5-minute time frame and I started seeing what is going to happen. All right, what is going to happen in the course of this trade. So I was watching it. I said, okay, this is it. Price had this. Look at this. Please look at this carefully, guys. Price swept liquidity here, right here, pushing up, retracing, boom. Now, for those of you who are conversant with ICT concept, what is this institutional reference point? What do we call it? I will give you just 3 seconds, or tell me in the comments. Let me know that you know what you're doing. Just pause the video and look at it carefully. What is this institutional reference point? Is this not a bullish mitigation block? It is a bullish mitigation block because I expect price to come back to the mitigation block and take up. So right here, what do we have? Push down, push up, down. So the last bullish candle that price printed before the downward candle is your bullish mitigation block. So right here is where your bullish mitigation block is, right here. So this guy, let me show you the guy to be precise so that you don't make mistake. This guy was your bullish mitigation block. This and this, all right, is your bullish mitigation block. So that was when I shared the signal. I didn't hesitate. Look at this. I marked that exact point and I said, let's see, I'm looking at this mitigation block for an entry GBP USD, and look at this. Let's see it. I was waiting for the entry to come. It did the right thing. My mistake was here. I think where my mistake was, I was expecting price to come to the body instead of me to use the tip of that mitigation block, and absolutely my stop loss is going to be there. I was using the body of the mitigation block and price actually left me. All right, price left me. If I was using the tip of it, I would be in the trade, but I was here, just here. I think the body somewhere around there. Price left me, guys, and it panned me. When I came back, I just closed my chart to just do some few things, and absolutely I missed out of that particular trade. What a powerful trade I would have been part of, but I missed it. Right here you are seeing how the trade is playing out. Let me just forward it so you can see how it played out here. You can see. So that was the trade, guys, without any challenge. And if you were part of the trade, congratulations, guys. That is how to trade in the forex market. It's pretty much straightforward without any challenge. Now, if you are facing any challenge identifying this, you can simply use my YouTube channel to learn. Everything is free right there. Head over to my YouTube channel. Look at a lot of videos that are going to help you to start out in the market, right? So it is simple and straightforward. I have done this time and again and again and again. I told you earlier that if you stay with me, you're going to learn this market and you will learn a lot of things that will help you in the market, guys. Now, I want you to do something. Go ahead and share this video with your friends. Invite people to come and subscribe to this YouTube channel so they can learn. Let's build an army of forex traders, guys. Thank you guys for watching. If you have any question, let me know in the comments. See you in another video. See you there, guys.